Hello everybody, this is another update on the Gold Forecaster Index, the index that can predict the gold price 6 months ahead. So let's see what the gold price did the last time. The last time was in October. We saw that the gold price rose, but this was not anticipated by the index because we would think that the gold price was very weak. But I think that this rise was probably due to the Lunar New Year of China. So they are buying gold for the new year, which just ended in February here. So I think that we need to be very cautious now because the gold price is most likely to go down now. And I will tell you why. So the gold forecaster index, both of my charts, this is the chart with the consumer price index, and this one is the one the with also the producer price index here, producer price index, which is even a better chart because this is a leading indicator for the consumer price index. And we see that the red chart is still in negative territory, although there is an improvement here, but we're still negative, which means the gold price is likely to go down or at least be flat. And let's go over all the leading indicators and see why this is happening. So the first one is the capacity utilization. And okay, this is actually one of the positive indicators. We see that the blue line is rising, which means there should be some inflation coming in the coming year. So that's good for the gold price. The next indicator is the producer price index, which is the price of the output from producers. And this is leading because the producers will push the costs to the consumer. So this blue line is the leading indicator for the red line. And lately in 2018, we see that this has come down a bit, but it's still in positive territory, which means it should be good for the gold price, but it's a little bit weaker now. The next one is the money supply, and we see that the balance sheet is still being unwinded by the Federal Reserve here. But of course, in January, Powell said, the Fed Chairman Powell, he said that he was open to pause rate hikes. So that's probably also a reason why the gold price went up here in January, because they anticipate that the Federal Reserve won't increase interest rates anymore. So that was positive for the gold price. But this chart is saying that it's still negative. So if Powell keeps unwinding the balance sheet, then it will be negative. But we will see. It all depends on the Federal Reserve. Then we have here the next leading indicator. We have the 10-year yield, which is, well, you can see here the blue line is the 10-year yield minus the consumer price index. So what you see in the blue line here is actually real inflation, and it's actually at zero now, which means if you buy a 10-year treasury yield, treasury, then you will have zero return because you would get 2% and minus 2% inflation is zero. So this blue line has been going up, which means that's bad for gold because gold does well in a negative interest rate environment like this, negative. But this line has been moving upwards, so that's also a negative for gold. Let's see. Okay, we have the latest trade deficit numbers. So we had to wait 2 months before we had a new data point here because the government was shut down for 1 month, but the data is still coming out at this moment. And the latest data point on the trade deficit was in November here, and we see that the deficit is shrinking. So that's also not good for gold. I had expected that the deficit would continue to grow here, but that's not the case. It's now shrunk here, and that's also a negative for gold because that means that the US dollar, is more stronger than anticipated. So that gives the new data point here in November for our gold forecaster index. This is the consumer price index version, and this is the producer price index version, and we're still negative. So this part was probably pushing for this upwards movement, but here we see that we're still negative, so I think we should be flattening out here. So I would be very cautious now um, to buy gold. So I would just stay in cash, and we will see what will happen. And I'll see you in the next video.